Welcome back to the webinar, Money Management for Traders, 12 Ways to Lose Money in the Stock Market. Here's author Bob Joyner.
This was point number 12, if you remember, in my series. This simple little trade review, you should print this thing out, go to wherever and make multiple copies of it, punch holes in it, and put it in a notebook. And every time you make a trade, fill this thing out. Every time. I don't care how good you are. I don't care if you do 5 trades a day or 1 trade per week. Do it every time you trade.
I know that Manny talks about keeping a trading journal. I assume that's what this is, right? It kind of guides you to creating your journal entry.
It tells you exactly when you bought, how much you bought, how much you held, when you sold, whether you made a profit or loss. And the big thing is number 8 down to the bottom. In parentheses, you should always print your charts. Print the chart every time you make a trade. Before you press the buy button, press the print button. And print the chart of whatever you're trading so that you can see exactly what you saw when you bought, or whether you bought long or you shorted the stock. So you have it all in front of you there so you can review it. And then the last point there is number 8 down at the very bottom of the screen, where it says, what did you like, dislike, or wish you had done better with this trade? If folks will do this on every single trade, I guarantee you'll get better. Because what you'll do is you'll start to see patterns with yourself. You'll start to see yourself making the same mistake over and over and over again. And after you see it for a while, then the light bulb finally goes off and you say, well, okay, maybe I need to address this. And then you figure out how to, whether it's putting stops in place or whatever, how to correct the situation so it doesn't keep happening. But if you'll print your charts, download this thing, make lots of copies of it, and do it on every single trade, I guarantee you'll improve your trading. I still do it, and it's just been a huge learning tool for me. ESLR, one of the things, if Trader Joe had reviewed his trades that he would have noticed, is if he had gone back and done a daily chart over a 3-month period, you can see where the blue arrow is right there. You can see where he actually traded that gap down. Not that he couldn't have made profit that day like we've already talked about, but if he had looked at the context of that stock, he would have realized that that stock was headed down. And that's not a type of stock you want to hold for days on end. That thing just kept going down. All of the indicators are pointing down. There was no doubt at all. It would have been a great swing trade down if he had just held on to his short position, actually, and gotten out completely of his long position. Okay.
Just want to remind folks that you're listening to an interview with Bob Joyner, who's author of a few books, and we'll be giving you links to where you can buy his books, and also for folks who sign up for a trial subscription to the First Hour Trading System. We'll give you details about that in just a second. We're getting some questions about that, like Forney saying, hey, what about First Hour Trading? We'll tell you about that in just a couple minutes, and also we'll give you that link where you can download the 12 things not to do, 12 things so you don't lose money.
We talked about a way to stop losing so much money by doing a stop and straddle. Now the strategy I want to talk about is what I call a movable stop. A lot of people on our last webinar asked, well, how do you know when to get into a stock and when to get out of the stock? And the movable stop, the way it works is this. One way to use stops, of course, is to limit your losses, and most people will do this. Well, some people will do this, I should say, and that's they'll put a stop in place that's 3-5% below where they bought the stock. So if it goes down further, they're going to get out. Bad news is you lost 3-5%. The good news is you didn't hold it for too long, much longer. This is a stock that gapped down a huge amount last Friday. You can see the stock ended the day prior at 12.53, and the next morning woke up to find that about 43% of their stock value had dropped. Hate to be the CEO of that company when that happens. But that's what happened. This was last Friday. If you want to go check it out, this ticker symbol SWIM. So what do you do on a stock like this? I mean, this is a great gap down opportunity. Sometimes you have to be careful of this, but what happens, this is actually RSI climbing throughout the day. You can see where the MACD agreed with it, and you can see where the stochastics shot up after that low point and just kept climbing. So everything's an agreement here, what I call the congruence of opinion. But how do you capture that? How do you know? I mean, after you've made about 10% or so up in here, you start to think, well, should I get out? Am I being greedy by staying in this trade? Should I get out of this thing? One of the ways you can do is what's called a movable stop, and that is this: instead of just putting your stop loss down here or your stop down here, let's say at 670 or something like that, in case it went down there. As that stock continues to go up, you move your stop up, let's say 2% below where the stock is now. And you kind of keep an eye on it. You got to allow for some small things, as you see right in here, where it's going to dip down just a little bit. So you got to be careful with it. You don't want to put that movable stop too close to the price, especially when all of your signals here are pointing up. Everything's telling you, hold on to this trade. So you want to hang in there and let it make it some minor adjustments. But if you take a movable stop and you say, okay, well, I'm going to put my stop here, and then I'm going to put my stop here, and then I'm going to put my stop here, and throughout the day, you're just guaranteeing yourself more profit. Most people think of a stop, this is that one thing I set here, and then I got to figure out when to get out of the stock, when to sell. With a movable stop, you just keep moving that thing up like a lever, and eventually it's probably going to come back down and stop out, and you can be very happy with the profit that you made. Here, if you had waited till this long to sell it, I would have gone ahead and sold it before the end of the day, as I always teach. So it may not have ever stopped out with your movable stop. So at the end of the day, you're just going to get out and take your profit and go home. But a very sweet play. I think that was about a 15% ROI in one day. All right, Rick, I've talked too much. You go ahead and...
Never talk too much. We hang on every word. And in fact, we've gotten some very good comments from folks. For those folks who are asking where they can get their copy of the top 12 ways to lose money, here's the URL, firsthourtrading.com/top12.pdf. Manny suggests that you print it out, you keep it next to your computer, just as a reminder of what you should not be doing. So here's the special offer that we were talking about, a free 30-day trial of the First Hour Trading System. As Manny likes to say, you can make enough money in the first hour of trading to take the rest of the day off. Now, day trading is highly risky if you don't know what you're doing, but Manny is an acknowledged expert in day trading, and that's why he started the First Hour Trading System. So if you join First Hour Trading, you maximize the probability of making money while minimizing the risk of losing money. How? Well, frankly, you don't make the trades yourself. Manny makes the trades, and you follow along. You follow Manny's trades every day. Now, admittedly, you may not win on every single trade, but he has a 70% success rate with average returns, as Bob just said earlier, of 1% daily, and that's far ahead of what most day traders get. Now, there's nothing that you need to learn or study. You don't need to do tedious research and analysis, and you don't have to stay glued to your PC all day, particularly as this weather's getting nicer. You don't want to be doing that. That's what Manny's doing. He is doing all the research for you so you can make trades that work. And as we said, today's special offer, you get a free digital copy of Bob Joyner's book for everyone who signs up today for the trial subscription to the First Hour Trading System. So if you sign up for the 30-day trial, you get instant access to the First Hour Trading chat room where you can learn Manny's trades. You sign up tonight, well, you could be making money tomorrow morning with Manny. The First Hour Trading 101 kit, which includes a CD tutorial, training videos, printed guidelines, and that's yours for $7.67, basically the shipping costs. And then today you also get a copy of Bob's ebook, The Power of the S-Curve. Now here's the URL, firsthourtrading.com/details.html. That's firsthourtrading.com/details.html. Now you must have $25,000 in your trading account, and you have to be able to spend about an hour between 9:30 a.m. and 10:30 a.m. Eastern each day with your computer in order to really take advantage of the First Hour Trading System. So if you sign up today, you pay only for shipping for the First Hour Trading 101 kit. You get to try out Mandy's system for up to a month. If you cancel within 30 days, all you pay is the shipping costs. But most people stay with Mandy for only $297 per month. So if you sign up right now, you can start trading tomorrow. Bob Joyner has been our guest today in our special webinar sponsored by WealthPire. Bob, did you have any parting comments?
If your outgo exceeds your income, then your upkeep is going to be your downfall.
Thank you, Bob. And thank you, everybody, for attending the WealthPire webinar.